Good morning. Wishing you all a happy Ganesh festival and Mechami Dukuram to everybody. Thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global news flow first before we get to what the market's performance has looked like. So Asian stocks have remained skittish for a third consecutive day now. That might have a bearing in addition to the other factors on the Indian markets. India has expelled senior Canadian diplomat as the tensions rise between the two nations. Australia's Bureau of Meteorology has made El Nino declaration and BlackRock strategists have downgraded China stocks on growth concerns. Well, it's not pretty news. And even on the commodity side, it's pretty iffy, maybe because of the growth concerns or otherwise. So if you look at wheat, it's extended the drop with Ukraine's Black Sea grain ships in focus. That might be construed a positive, but oil prices continue to rise. Yes, they've eased a little bit after hitting the $95 per barrel mark, currently at about 94 ahead of the Fed decision, but that's hardly any solace. Goldman has cut aluminum price estimates on weak ex-China demand, and Rio Tinto CEO says Chinese steel demand is close to peaking. Well, that's not great news for ferrous metal companies, and we saw some signs of this on Monday trade when commodity stocks came under a bit of pressure. Okay, and we'll get to that. But first, what the US stocks did in trade yesterday. Again, sideways to marginally lower, if you will. But yes, there is ahead of the Fed, certainly a bit of a quiet on Wall Street in trade yesterday. But the yields have inched up. The 5-year yields have inched up as well. I would reckon the 10-year yields too would have moved up a little bit. So as of 7:30 a.m., the US 10-year yield was at 4.36, higher from the 4.34 mark. Volatility was steady, dollar index steady at 105 odd, but the yields certainly have inched up. The gift Nifty, the last time I had checked, was indicating a start which is flattish. And yes, about this month. So no big changes there as of now. But could this be a false indicator? Today, especially, well, I think time will tell. But I think from my perspective, when I look at the trade setup for the day today, yes, small caps are overextended, and that is known. But I think large caps too are now looking corrective. For a lot of time, some of you have been asking whether this is the time to go naked short. I don't recommend trading recommendations per se. Unfortunately, I'm not an expert enough to do that. But it certainly looks like there is a bit of caution warranted, especially on leverage trades. So forget the index, even on specific stocks, leverage might not be a great word currently. You might essentially get corrective moves, and there are various reasons for this, right? The India-Canada tensions, oil prices being higher, a Fed meet in focus, and if the Fed doesn't do what the market expects it to, then there are these 2 or 3 reasons in focus which might bring about a corrective move. I'm not saying it's a very deep correction, and 4-5% can happen at these levels, remember, but 4-5% on the index could mean much higher at the broader end of the spectrum. So please be careful with your leverage positions if you have them. Commodity stocks corrected in trade on Monday, and I reckon that it could continue today based on my conversations. The only place which looks set for more gains is oil upstream. You could argue that in a Jeffries note today, I read that even telecom might be that place, but oil upstream looks poised for more gains, while bank Nifty could sulk today. Now, viewers, the point is this, that we have multiple reasons why there could be corrective moves, with oil prices being a principal one. Remember that, in addition to valuations. So therefore, in terms of pockets, oil upstream at one end looks good. I was reading a Jeffries note today which says that when you look at when the view from Delhi, that uh, the fisc situation that we have, and considering that oil prices have risen, it only makes the maneuvering room a bit tighter. Might all lead to maybe a bit of a corrective move. They have raised their cash levels in their note. They have mentioned that we advocate raising cash, moving out of even some of the capex themes into cash and into. They've mentioned that they've got into Bharti Airtel. But the limited point that I'm trying to make is, yesterday a very smart thinker and a fund manager sent me data around the overextended moves in mid caps and small caps. And by the way, my colleague Chinmay Vasdev has done a story on a couple of key indicators which lead one to be cautious at the broader end of the spectrum. So you would hear multiple people tell you this. We are not the only ones, but I'm just telling you that that story is worth reading, because give you a sense or two on the profit pools and the market cap representations. Or do try and log into our website and search by Chinmay Vasdev's stories that we've done, and you will get this story about two indicators that indicate that there could be need for caution at the broader end of the spectrum. So be mindful of at least the mid cap and the small cap space and the leverage trades if you have them out there. Please be careful on that. Now, stocks to watch today. I'll start off actually with a brokerage note if we can, and that is HDFC Bank's note, and then move on to the others because I think, to my mind, today HDFC Bank remains a key stock to monitor. So Morgan Stanley, post that analyst meet, has come out with a note saying that their target price is unchanged at 2110. The rating is not buy, it's overweight, so excuse us for that. But nevertheless, be that as it may, please, if you ignore that, the target price is unchanged at 2110. Now, what is the call? They are lowering their book value per share and earnings estimates, is Morgan Stanley. They say the one-time net worth and PLN adjustments are one of the key reasons why they have lowered their estimates, because HDFC is restated from Ind AS to Indian GAAP accounting, and that brings about these adjustments necessary. They believe that the NIMs will be lower given ICRR and excess liquidity drag, as well as elevated competitive intensity. And that is certainly true. I mean, a lot of people are now opening accounts digitally with other places which are giving them a higher bang for the buck and not necessarily the HDFC banks of the world. Now, this is a short-term phenomenon. After a bit of a corrective move, you will see, if you see growth there, then people might believe that it's merit in buying the largest bank and the safety thereof. But for now, post the analyst meet and the notes that have come out, I suspect that HDFC Bank could have a bit of an issue today. Maybe not too much, because remember, the valuations are no longer expensive for HDFC Bank relative to a bunch of other banks. It used to trade at much higher, 3.5 times price to book or thereabouts. It's come off quite materially from those levels. So therefore, it's not trading expensive, but just that, yes, there are, as this note suggests, a couple of issues out there. So do watch out for HDFC Bank today, and HDFC Bank led softness in Bank Nifty, led softness in the Nifty as well. Such a high weighted stock, and post that analyst meet, certainly no buying there. So this, to my mind, is the biggest thing, in addition to all the stories floating around Canadian pension funds and what the impact out there could be. I must tell you, viewers, before I move on to the other stocks, that on the India-Canada thing, I spoke to a couple of people, and I asked them, because they manage money in some fashion. Most people are saying that there is no way to figure out whether something like this can happen. Pension funds and other funds have boards which do not necessarily take a decision based on one-day geopolitical developments. There are returns responsibilities, and therefore it might be unwise to try and think of large Canadian investments into India are definitely at risk, especially in a passive side, but in a fund management side. On individual company specific things, sure, things could happen. Like, so there is, I'm sure all of you will hear about how, for example, Prime Focus gets 70% of its revenue, 70% of its revenue from Canada. Could that get impacted? Sure, it could. And therefore, Prime Focus as a stock could react. Phoenix Mills, company and CPPIB have got an agreement to develop an office-led mixed-use project as a joint venture in Mumbai. Could that get impacted? Sure, because they could decide that, okay, we don't want to go ahead with a particular individual thing. But to say that a large set of investments are at risk, I personally don't think that is wise to say it that way. But let's wait and watch. There could be some pressures out there. So we'll have stories on our website. By the way, my colleague Sajid Mangat has put out a version of his assessment of what are the businesses wherein Canadian funds have the largest investments. You might want to tune in or just log in and try and read that. That will help you. It'll be on our website in about 10-15 minutes. So pre-market hours, you will get a good sense of that. Then stocks to focus on: Tata Motors will increase prices of commercial vehicles by up to 3% with effect from October 1st. Watch out for that one. Biocon has appointed Peter Baines as Biocon Group CEO with immediate effect. So there is a person out there in addition to Kiran Mazumdar-Shaw running the show. Blue Star QIP to raise up to 1,000 crores open on September 18. The floor price for the QIP set at 784. Prakash Industries has received an environmental clearance for its Chhattisgarh commercial coal mine. The development is fast in progress, so this could be constructive for Prakash. So watch out for that one. And while I've brought you the Morgan Stanley view on HDFC Bank, the other one as a brokerage note which stood out for me was the Jefferies note on JSW Energy. They have a buy and a target price has been raised to 500 from 365. They say they expect three triggers to play out for JSW Energy over the next 12 to 24 months. Visibility improving on renewable energy, moving to 81% of capacity by FY30 from 52%. Commissioning of the 700 megawatt merchant capacity in peak power deficit times, which is positive, and progress on one of India's first green hydrogen plants and green energy storage battery unit. All of these are triggers which might help JSW Energy in the times to come, according to Jefferies. Do watch out for this one as well. That's a long and short on the trade setup today, viewers. There are concerns out there, not permanent concerns, but ones which can certainly bring about a bit of a corrective move on the markets. I'm not trying to scare anybody here. All I'm saying is that if you have leverage, please be careful. On select items, there might be merit if you are a sharp trader to even go short. But more importantly, for an average person, average investor, it just makes sense to be a bit careful with your mid cap and small cap investments at the very least. Please do check your conviction levels around them. I'm not completely convinced. Certainly do away with a little bit of leverage if you have that. Thanks so much for tuning into the Trade Setup, a clutch of important conversations. We've told you about Chris Wood, and that played out on Monday, but so many issues around valuations and other things. So Manishi Ray Chaudhary of BNP Paribas, from his vantage point, talks to a lot of global managers as well. Would be an interesting talking point today, so do tune in for that. And Nandan Chakraborty of DAM Capital joins in to talk about their India strategy note, wherein they're talking about a clutch of stocks which have a potential to double. Ask BQ at 11:30. Now let's get that going. Ask BQ at 11:30. You can put in your individual stock queries for Dharmesh Kant and Nilesh Jain. So that's at 11:30 a.m. today. Do try and tune in for that as well. A derivative show as well with my colleague Agam Vakil today, happening at 10:30 a.m. Kunal Shah of LKP Securities would be on for that. So a bunch of things happening on BQ Prime. You might want to tune in for all of these. Thanks so much for tuning into the Trade Setup.